Welcome to try number 2 today for Tracking Trends Thursday. I was live earlier. You may or may not have noticed, because if you noticed, you couldn't see me or you couldn't hear me. So hopefully this time it looks like you can see me, and I'm hoping you can hear me as well. That'd be a win. So today is Thursday, June 26th. Let's talk about what is happening in real estate. And it starts with interest rates. They have come down a touch. Not a whole lot, but nice to see some downward movement there. 6.77 is the average fixed year rate for a 30-year mortgage, and that is just below the monthly average of 6.82 and just above the average when you look back for the past year. So a slight change there. The Fed did meet last week, and they maintained their interest rate where it was. That is what was expected and anticipated. And they are, however, saying that they do expect to drop their rate twice this year. Experts are thinking that's the first time we'll see that might be in September. Now, we might be going into war, so that could certainly change the picture of a lot of things for a lot of people. So who knows what will happen if that happens. In other economic news, consumer spending did drop more than expected in May. Gas prices, or gas, not prices, gas sales of gas. And maybe people are, I don't know how people buy less gas if they still need to drive their cars. But gas sales fell, and shoppers tightened their wallets due to economic uncertainty. And home builders did report an increase in use of price incentives. So that means they are feeling the need to motivate buyers to buy their homes. So that is a sign of less buyer activity for new homes in particular. Also, housing starts, which means how many builders are starting new homes, fell to a 5-year low, and construction of new homes fell almost 10% in May due to decreased demand for new homes. Purchase applications for mortgages dropped 3% for the week, although 14% higher than a year ago. Interest rate, believe it or not, is actually a little bit less when you compare to last year. We're down about 0.09 from last year, so that might be why we have more applications this year than we did last year. In the Mid-Atlantic region, these are more of the same trends that we have been seeing. Time to contract is slower than it was last year. Buyers tend to have more time now than they have had in the past, from when a home goes on the market until when it goes under contract. Sellers need to have maybe a little more patience than they're used to having. And listing agents like me are used to things going under contract very quickly. Right now, we're seeing it take a little bit longer. New contracts are less from last week, but similar to last year. Again, for the Mid-Atlantic regions, what we're looking at here, new listings are similar to what they were last year. So we're seeing the market kind of just flattening is what we're basically seeing there. In the larger DC metro area, showings and other things, most things are up when we compare to last year, but not by a much. So again, actually basically flat. Showings are up 1%. Purchase contracts up 3%. Those are not big numbers. So basically flat. New listings up 1.5%. One big number is active listings are up by 40%. That is a big number, and that is a trend we have continued to see for quite some time now, that listing inventory is increasing. Also, time to contract increased by a pretty big number, 8 days. Median time to contract for our larger DC metro area is at 28 days right now. List price up almost 5% compared to last year. So most things, actually all things, are up from last year. Compared to last week, we are also basically flat, although interesting enough, showings increased. Not exactly sure why that might have happened, but there's 9% more showings than the prior week, but 6% fewer contracts. Time to go under contract is flat at 0 days compared to last week. New listings are down. That is what would normally happen this time of year. We would normally see less listings, less buyer activity in the summer months. And active listings basically flat at up by only 1% from last week. List price is still up week over week, 1.6%, and that's interesting. Again, normally we would start to see that come down as well. In our hyper-local market, these are pure numbers here, so number of new listings and number of new contracts, and we're looking week over week here at the new chart that I am sharing with you. So we have fewer listings and fewer contracts than we did last week, but not by much, and we're still actually a touch higher than the average for the year. So that is a normal seasonal trend that we're seeing there. This chart shows you the interest rate and average days on market for our hyper-local area of Arlington, Alexandria, Fairfax, and Falls Church. So that one factor of stability is still interest rates. So that is still stable, basically flatlined. And you see a big dip here in days on market, which is interesting. So that number was actually 11 this week compared to, I think it was 21 or 22 last week. And so that's a big dip. We'll see if that continues or not. Don't know what to attribute that to just yet. And here we're looking at the demand to supply ratio in blue, the year-over-year change in supply in red, and the year-over-year change in contracts in green. So demand to supply ratio is similar to what it was last week. And supply is up. Inventory is up year over year at a similar percentage that it was up last week. The green bar change in contracts, you can't even see it there, right? So that's negligible in terms of an increase in contracts, but it's not down. In the course of the year, you can see there were some weeks where contracts were down year over year. So we're not down in this, past, it looks like about 2 months. We have not been down in contracts, but we're also not significantly up. So again, I would say the market is basically stabilizing, flatlining is kind of what I see when I look at this data. The one chart I don't have for you is week over week, what's happening in our hyper-local market. So week over week, inventory is up by 6% and contracts were down by 2.5%. So small numbers. And again, that decrease in contract is normal for this time of year. That is your weekly market update for this Thursday. And hopefully, again, you could see me and hear me. I'm not going to do it again if you couldn't. Next week, I will be on vacation. So I may or may not be here. I'm going to try to be here, but I'm also going to try to enjoy my vacation. So if I don't show up next Thursday, it's because I'm enjoying some downtime that I have worked hard to earn. So if I show up, I might not show up on camera and just share with you the PowerPoint. But regardless, I will be back the following week to give you another Tracking Trends Thursday. Thank you for watching. And if you ever want to have a conversation about what this all means and how it impacts you and your decisions, please reach out anytime to me, 571-210-1866. You can call me or text me there. That's the best way to reach me. You can also email me at kristen@homesbymason.com or click the link down below. Wherever you are watching this, there should be a link down below to get on my calendar. If you like the information that I share, if you find my weekly markets update, please give me a like and or follow me wherever you are watching this and share it with other people who would find it helpful as well. So thanks again. Have a great weekend, and I'll see you next time.